Ah, there you are. Good morning, love. How are you, Francis? Good day, sir. Hear me okay now? Good. I was fumbling around with number of frames recorded per second. A 2 hour recording yesterday was, what was it, five gigs? Kind of a big recording. Or 5 gigs, 5 megs. 500 megs. Something like that. Anyway, it was about 10 times the size that it should have been, which made it take quite a long time to render. This is an interesting spot we're in now in the euro that we're approaching. So if you remember from Sunday night, if you were there, then hey, good morning, good morning, good morning. Yep, that's what I set it to, Tony. Actually, I set it to 6 just in case. I mean, sorry, 8. Just in case 6 was a little bit, how do you call that? Lossy or something, where it looks like it's stuttering or whatever. So anyway, I think 8 is pretty reasonable. Good morning, good morning. So this is not a triangle, but it is a double 3. I think. To be honest with you, it doesn't look like a double 3. It almost looks like it's a 1, 2. It kind of looks to me like this is not going to be the end of it. Once we hit this area below 116.60, but it's worth watching because this is okay. This would be a setup on the 240-minute chart. You might say it's a setup on the daily chart, but on the daily chart, it's got to come down still quite a bit further, and I would connect this rather to that high because that upper median line gives you the high. And then you have 2 areas that we usually find the end of wave C at for the end of a fourth, which is that channel, that parallel from wave 2, or that median line and or both. Preferably a bar touching both. That's when it's the most obvious. So I've been waiting on this one for about 2 weeks. But it's one that's going to require a pretty big stop. I wouldn't use an 800 tick stop, but oh, this is pips. Sorry, this is yeah, the actual forex market. Let me see what 60 is on the daily. It's still really, really big. I'd use a 240-minute. Let me show you what I mean. It's not min 6. that is at period. Hey, good morning, guys. I'm just trying to get this thing on YouTube real quick. I think this is going to be the chart that we'll use to determine the size of the stop, the minimum size of the stop. Let's just count how many bars make up this correction so far. Yeah, about 100 bars. So any more than about 130, and I would use the next size smaller, which would be probably a 180-minute chart. So I use the highest number of these three values. So to take this trade would mean swing trade, obviously. You would only be taking this if you were considering holding it for days, maybe even weeks. Otherwise, it wouldn't be worth that amount of risk, right? I mean, you could try to scalp it, but would you be trying to scalp the lowest low of the past 20 days? I guess some people would. I wouldn't. I don't even know what scalping means. I think it's retardation personally, but let's just keep that between you and me. Excuse me. Well, I tell you, once you've enabled two-factor authentication, it surely becomes quite difficult to sign into everything. But then again, it also makes it a bit more difficult for people to hack you. So that's nice. Or whatever you want to call it. Very bizarre. Okay, well, I struggled with this one time before. Last time I did it by myself, it worked just fine. And then now it doesn't want to work again. So we're just not gonna worry about it. Nope. Can't be bothered. All right, fine. Sometimes it works, sometimes it doesn't. Right, so on the 6E, this is quite a bit farther away. All right, come on. One of these buttons is gonna do it. There it is. Yeah, that looks to be several waves away. I don't know that this is correct in what I'm thinking about this, but the way that I had worked it out was basically just a 1, 2 here, and then 1, 2, which is dodgy, to be sure. I mean, that's a kind of an ABC looking move. And then the way that I did it was 1, 2, 3, triangle 4, and then, you know, this whole big extended fifth wave of wave 3 ending with an ending diagonal, and that would be wave 3. And then we'd be looking for wave 4 down here. Okay, and that would make the first wave up of what is going to be a pretty big move to the upside. The flip side of that, or let's say the other view, would be that we've completed 5 waves of what is the 5 waves at the end of a C wave, meaning the end of a corrective wave, and now we go down to parity or lower, which I just find fascinating that people can. I mean, anything can happen, obviously. We know that, right? Every time you try to predict something according to uh, fundamentals, you're usually left scratching your head after it plays out. That's why economists are a dime a dozen, and they have really horrible track records, and yet people still hire them. I don't understand it. Sorry if you're an economist, but I went to school with a lot of them, and I don't know. They sure know how to pound a beer, but that's about it. Anyway, yeah, they don't learn a whole heck of a lot, huh? They learn how to maybe, possibly, potentially forecast something, maybe, according to a bunch of nonsense. Yeah, doesn't work very well. But something as rudimentary, seemingly rudimentary, as the wave principle has a much better track record than any economist ever thought about having, and yet is totally dismissed as pseudoscience. Kind of seems to be the way of the world these days. Truth is relative. Your truth is your truth. My truth is my truth. And I can't tell you that you're wrong. You can't tell me that I'm wrong, because there is no objective truth. Anyway, foolishness. So that's the opposite view. If you caught that in there, that this is the major high, and now we go down for one more gigantic low. I just don't see it. I'm not seeing it. I'm seeing, although it is a perfect hit of that trend line, I'm seeing a potential 4th wave about to set up. And I like it. And I want to take it. And I want to wait for it. This is what I don't like about the Forex, though. The volume in the Forex on a daily chart is it's just a bit odd looking, isn't it? It's like every few days is just a low volume bar no matter what. Low number of ticks. And I think it's got something to do with a Sunday night, maybe? No, it's just a Tuesday. Huh. Quite bizarre. Yeah, it's every Tuesday. How about that? Very low number of ticks in the Forex markets on Tuesdays? Seems a little strange. But nonetheless, when we're trading the 6E, it is nice to have the actual underlying instrument open, which is the Forex market. And we are quickly approaching the bottom of that channel. Now, let's see. This is the problem with this. There are 3 major highs in here. I'd have to use that one. I mean, I'd have to use that one. Pretty obviously. 1, 2. Yeah, unless we fly right through this channel, you're probably going to see me start to enter a position that I'll take up to 7 contracts in the 6E and hold for probably 2 to 3 weeks. And now I need one more of these, which I'll duplicate in the next tab. So you're agreeing with me, Surajit? You tried to talk them out of it, right? And they said, no, Dad. I know what I'm doing. I started to take economics, and my uncle said, okay, well, if you want to know nothing by the end of your term and be able to forecast worse than a coin toss, good choice. And then I started thinking about it. Well, what does that mean? And then I quickly realized, yeah, they don't have the best track record. Old Krugman is about the worst. I don't even know how people can have him on anymore. It's kind of obscene. Such a nerd. I mean, I'd be embarrassed to come back on TV after the stuff that he says that doesn't happen. Well, he's got his own publication, doesn't he? That people pay for. I'm not going to lie. I signed up to it when I was a kid. I say I was a kid. I was 21. It's pretty much a kid. Think you know everything in the world, though, don't you? And then you quickly realize, nope, you sure don't. But it takes about 5, 6 years. Maybe more. Well, that's just it, isn't it? Yeah, you can get a degree in knowing nothing. I mean, where I went to school was I mean, I may as well have been in, Vermont. What's the name of that school out there? It may as well have been Berkeley. It was nothing but art majors, and well, that's not true. We had a pretty big business department, international business department, and I got my first uh, test in teaching because I had an awesome professor that I love very much. He was a really good dude, and saw that I was struggling to pay for college and let me be the teacher's aide for a few years to him, which I think it paid like, I don't know, 2,600 euros a semester or something like that, which helps a college kid out tremendously. But I got to teach operations management for 3 years, 6 semesters. No, 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 no. 4 semesters. My last two years. I just wish I could. I mean, that was operations management of, like, you know, gigantic firms. Doesn't really apply to what I'm doing now. I wish it did. Off topic. Rein it back in. But yeah, I remember there was one girl that I had met that I liked quite a bit until she told me what she was studying. Uh, Women's studies. No, gender studies. I said, okay, gotta go, gotta go, gotta go. I forgot I have another appointment at 9 o'clock at night. Yeah, sorry, gotta go, gotta go. I'm needed elsewhere. Didn't realize that was a thing. Gender studies. Hmm. Why do you need to even study? Uh, Whatever. That's the kind of stuff you can just read in books. You don't need to pay $10,000 a semester to learn it and get indoctrinated by some communist professor. All right, enough of this nonsense. Let's see how me trade is doing. Better be kicking butt because I have held through more than I cared to hold through. And I've left the computer running just to see. Uh-oh. Well, now, isn't that interesting? 1 second. 1 second here. It's interesting, you know, when I change screens, Ninja immediately closed. I've got pretty much all the processes I can turn off. I'm gonna turn this one off. Okay, let's try it now. If you've not seen this before, this is just to make sure that we have a really elaborate, what we call a reader system that allows us to create sets of rules to signal at certain moments when various conditions come together, when they're met and are true. And this, what we call a Ninja Manager app, is what kind of, it manages the windows one by one, as opposed to the way that NT manages them, which is to kind of open them all at once, and then you can watch them flash on, flash off, flash on, flash off. If you've ever noticed that, it's a little bit bizarre. But this Ninja Manager attempts to manage that process a bit more fluidly without it eliminates about 4 possible crashes that are fairly rare, but it still, it can make the difference of between crashing or not crashing when starting up. There's one more thing that I want to add that I've not added. Yeah, I did do that. And the only reason I'm using Bitdefender is because I had already paid for it, and I've got all of these hard drives that I have to scan as I'm connecting them and bringing over the data. And I did not want to do that without first having a pretty good antivirus. And this one is supposed to be the best. I don't know that I believe that, though. But they definitely have the highest marks. Just kind of thinking that those marks are maybe up for sale. I don't know. This was my target yesterday, in fact. The top of this channel, or, well, no, not the top of that channel. What am I talking about? The top of this down-sloping upper median line, and we did end up making it there, and I would have made about 5 times what I did make, which would have been about $5,000, I guess, rather than closing where I did close it yesterday. I don't know that this can actually be a wave 4. Not really. Mm-mm. Interesting. That might be setting up for a nice long here, like right now. Let's have a look at that real quick. I've got signals on both the row 1 and the row 2, which means, what does that mean? It means that it's a setup on the 10-minute chart, and we've got enough confirmation from the volume and the divergence for a trade right this second. It's just that I've only just now found it, and I'm a little bit unprepared to just jump right in when I've spent little time focusing on the ES, because I've been focusing on my crude oil trade. And I was hoping that it would start taking off to the upside at any moment, and it had started doing that, thankfully, by the time we checked it a moment ago. Yeah, I'm thinking I may just take this one. It's not...
Order filled.
Whatever. It's a valid setup. I've got signals all over the place. I don't trust it. I don't necessarily like it, but I've programmed out some very specific rules, and it has met all of those rules. So, you know, it's definitely a valid trade. It's just probably going to disappoint, because I think we have another wave down to go. But I said that about the crude long yesterday too, and it worked out, is working out. And I think I said that about the ES trade yesterday too. So if I went on this one, that'll be 4 for 4, I guess. Although I didn't take the short. What are the rules? It's a good question. You a master suite owner? You are, in fact, a master suite owner. Would you like to have a look? Is this the Jorge that I'm thinking of, that I've spoken to? I think the one I'm thinking of is Ortega, not Arteaga. Do you speak Spanish or Brazilian? Or, sorry, Portuguese? Or neither? Just curious how to pronounce your last name. You are the oldest. Okay. Nah, there's another Jorge that's asking about the rules. I know you, Fernandinho. Gonzalino. I know who you are, buddy. Nah, I was confused. We've got like three Jorges in here. I wanted to get a second contract, but then I figured, well, let's not do that, being as I'm long two on the crude oil. Nope, nope, nope. Stop it. Dang it. I'll show you the rules in a minute. I'll show you the public version of the rules. I sort of talk about it on Sunday, huh? That Sunday session. It's a good time to ask you guys. Well, I'm going to do it the proper way, but tomorrow we're going to go over money management rules. We've got a member that's made a quite beautiful spreadsheet, and our guy Cedric that does customer support, which he should be doing, building bridges and injection molding and stuff like that. But he's quite brilliant, and he's kind of going over the spreadsheet a little bit just to take it, just to kind of verify it according to what he's learned, and then we'll all kind of do a powwow this afternoon on it, and then we'll go over it together tomorrow. I'm not going to pass it out, but we'll go over it and just show why it is that a small account trading the larger contracts will never, well, I shouldn't say never, because I actually did it in a live account in front of all you guys, or many of you. But a good portion of the reason for me being able to do that was, in fact, luck. And I used to say that jokingly, and you guys would say, yeah, right, luck, right. But in fact, it did have a lot to do with luck. Uh, when you learn about Monte Carlo analysis and risk of ruin and running simulations on your statistics, you kind of need to start with some statistics first to really wrap your mind around it. But we're going to do a kind of an exercise tomorrow just to kind of go over the variation between one number versus another. We'll kind of keep it simple just to get the point across about the importance of money management, position sizing, and the starting size of your account. Because if you're trading a very small account and yet still trying to trade these big contracts, you are either donate your money to the children's hospital or whatever, or me, preferably me, or go to the casino and make a good time of it, because you're going to lose it. So there's a reason why to have a stocks trading account, especially for intraday trading, they make you have they make you have a minimum of $25,000. Even though they do give you leverage in futures, that leverage is really an ungodly amount, and I think it's predatory. In fact, just as all the credit card lenders are these days. So they give you way more than you should ever have or need. and they give you enough to do yourself in such that 90% of all traders will lose 90% of their money within the first year. It's a weird number, isn't it? I think it's more like 95% of all traders will lose 95% of their cash within the first 12 months. Yeah, scary. But the fact is, why they're even trading live money in the first 12 months of opening an account is beyond me. Of course, you couldn't have told me that when I did it. I wouldn't have listened to you anyway. But, I'll at least go over it tomorrow. And that's what I was leading into. So Friday, I want to do this properly. I want to have a proper survey that we'll build out today together. 3 to 5 of us will, and we're going to put together a list of questions that we think are the most pertinent, burning questions in people's minds, and then we'll leave a spot for an open-ended fill in the blank so that we can send you guys a kind of a survey. So you'll have a list of maybe 4 or 5 questions. In what order would you prefer these questions be answered? Something like that. And then if there's another question that you have in mind that you would like to see addressed on Friday, what is that and why? So we'll hopefully get that out today so that we can compile it all tomorrow. Tomorrow being the day that we'll go over risk and money management, and then Friday being the day that we'll address all of those questions, so that you guys have a kind of open Q&A, ask me anything type scenario on Friday, which I think was a pretty good idea. Maybe I'll turn the microphones on, but not until I get you the update. I don't want to turn the microphones on before that. I'm not that stupid. Miss Diane, I'll address that question here in a moment. Give me 1 second here. I'm trying to figure out. I'm just trying to make sure that I have indeed added some exceptions. Yep, here we go. Cannot believe I didn't do this. This is basic stuff. I did it for one folder, but not the main program folder. I'm curious, is crude still going up? That'd be awesome, John. Yeah. I'd like to, okay. Yep. Wonderful. Let me just make a note of that real quick. Let me just screenshot this real fast, because that reminds me about sending out that idea note to everyone, to all of you guys that have been members for the longest period of time. Got a pretty good idea as to who will have some of the greatest feedback and suggestions. Don't want to send it to 2,000 people, but I would like to send it to at least you 50. I'm going to have to take a break for a second just to kind of compose myself a little bit. I can feel myself slipping into that tangent mode where I go off on just crazy subjects and just never stop talking. So we don't need that today. Good. Now I got it. Ay, ay, ay. That's what I wanted to see. See what I had to hold through? This. You see why tightening up your stops to break even is a no bueno show? And you don't do it.
Target filled.
We didn't quite hit the target, but we did have reason to exit for sure. And yes, I know it's Wednesday. Yep. I know quite well. It's so dangerous, though. No. Just like holding overnight is not so dangerous. It may feel like it is. It may be dangerous for someone with a $500 account. Well, yeah, because you'd be kicked right out of the trade, wouldn't you? Swing trading is not more dangerous than day trading. In fact, it's quite the opposite, which I think you'll see tomorrow. Only issue is you have to have a certain size account. That's what the problem is for most people. And that certain size account needs to be monies that you don't touch. So if you are trading with money that you're using to pay the bills from that account, out of that account, that's just not going to work. You'll never see that account grow, not in the way that it could grow. I think that's self-evident. I mean, that's kind of an obvious one, but yeah, if you're trading with an account that is so small that you cannot hold, one or two micros overnight, you need to be sim trading until you've put away enough money such that you can actually have an account size that makes sense. And we'll talk about what those numbers are, what the minimum numbers are for the big contracts, the micro contracts, and then, NASDAQ, differences between NASDAQ and crude oil and They don't have a micro crude oil per se, but they do have that E-mini, which is weird. It's a little bit, very thin volume. It's the QM. But if you're swing trading, it's fine. It just the slippage can be kind of dramatic on it. So I don't know if you guys remember me saying this yesterday or not, but I was talking about this will be one of those rare events where you'll see me do a stop and reverse when we pull back and my target gets filled. So I said I wanted to break that high here and hit these lows. Well, that may or may not happen. It's definitely hit. It looks to me like it's hit a brick wall right here. So yeah. I'm going to give it some time. Matter of fact, I'm going to step away for a couple minutes because I can't bear to sit here and watch this. It just about drives me insane. So, and then I'll answer your questions, Miss Diane. I'm kind of thinking maybe ending diagonalish. It's moving pretty fast for that, though. Let me see. Where's my tick one? Oh, let's look at the 5 minute actually. That's reason enough to close both of them, to be honest with you. I should do that. I should do that.
Target filled.
Okay. Fine. Only 2,000 instead of 2,950. But it was at the top of this channel. See? So I wanted to see the top of my downsloping channel, not just the upsloping one. But that's the thing. It can go from either or both. What I expect will happen will be that we'll get a slight pullback down and then we'll pop up with a fast bar, although we've already got all that out of this crude report. Yeah, I think what we're going to see is a bit of a retracement now, which would have had me, a nervous wreck. Oh my gosh, I'm going to give back my entire maximum favorable excursion. Exit efficiency is going to be horrible. My numbers are going to get skewed, yada, yada, yada. What I think will happen after that will be one more push up, hopefully a bit slowly, and then we'll have volume divergence up here. And I want to see a 2-bar pattern on one of the faster charts into that area between 53 and 64, preferably with the climax bar touching both of those areas. That's really what I want to see. And then if that occurs, that will be the point at which I go short. because ultimately that's what I was looking for, if you remember. I bought this low and I told you, yeah, it looks crazy, I know, but that's what a low looks like. It would have looked nicer if it had a bit of sign of strength before coming back into the low. But if this thing is going to fail and give us another ABC, this is the area from which it'll do that. And it was simply a big trend line up from, I think it was like back here. Yeah. There's a few other reasons for it, mostly volume related, but yeah, that's what I'm expecting to see. Okay. Maybe not all the detail that you would like to hear, but I'll go over some more when I get back. I must take a break for a moment. Jay is asking a good question. In order to trade with low risk entries, which one is more important, the volume or the market geometry? So yeah, it's a very good question, actually. The market geometry is the tool, well, methodology. Toolbar is the tool that allows us to apply that methodology as quickly as humanly possible. And then also allows you to import all of my analysis and Bo's analysis directly to your charts. It's all via the toolbar. Because you see, as I export it like so, this is me sending all of these objects to everyone's charts that are signed up for it. So the most important as far as determining where your entry will be and where your target will be is, of course, the market geometry and secondarily volume profile. Okay. And with that, kind of built into market geometry in the way that I think about it, I don't think Mr. Timmy Morgi would agree with this, but baked into that, market geometry has built into it time and price, right? Because you're drawing trend lines and channels. So it has baked into it both time and price in the forecast of where the next area for the reversal or the turning point, the next turning point in the market will be. Well, a lot of times you'll have some pretty interesting fib confluence zones intersecting those exact areas where the market geometry areas are colliding, the one that's sloping in favor and the one that's sloping against the trade. So I'm incorporating into the way that I do it also Fibonacci analysis and Elliott wave, and invariably there'll be 10% of you out there laughing right now, but that's okay. I actually have a track record that backs this up, but not only me, several people in the room do as well, one of which runs a pretty big fund in Amsterdam and is teaching people in relatively short order how to do just that, trade this method. And there's various ways to do it, and a lot of people have applied it, have applied their own view and methods to the general methodology. What I'm going for is very precise, pinpoint entries and exits. Like, for instance, this is, where did I enter? I think I entered here. So I haven't taken a trade in since I've been working on this update. That's quite a while. So I went long here and here, and I exited here and here. So that's pretty good entry efficiency so far. It's pretty good exit efficiency. Well, on the trade as a whole, it's very good exit efficiency. Just looking at the difference between my maximum adverse excursion and maximum favorable excursion. It's pretty close to the maximum favorable excursion, isn't it? In fact, no, they're both at the same price pretty much. So I'm trying to get very, very precise. Uh, Other guys are just kind of using the context as a way to basically find the direction, the overall direction, and just increasing the sizes of the stops and not going for nearly as big a target as I typically go for. The stats are a little bit different, but they have a much higher winning percentage than I do. You know, total percentage winning trades, or, you know, what is the probability to win of each trade. Theirs would be a little bit greater, in some cases extremely off the charts, much greater, like double what I have, but their win-loss ratio is lower than mine. So that's what we're going to kind of go over tomorrow. The nuances between those slight variations in one stat over the other. Sure, no problem. Yeah, I mean, the market moves. It's about to say in mysterious ways, but that's a quote from the Bible, actually. Uh, it's it's almost like there's order behind the universe. Well, I mean, just take a look around you. Order out of chaos. I mean, that's a satanic concept. I don't know how anybody can really believe that everything just kind of happened. And here we are flying 666,000 miles per hour around the sun that's flying 11 billion miles per hour around the Milky Way, or whatever it is now. That's, you know, the sun that's 93 million miles away from us, that used to be 66 million miles away from us, that used to be 17 million miles away from us, that used to be 600,000 miles away from us. So when people like Mr. Tyson, or whatever his name is, I just call him retard, but when people like him say that science is true, whether you believe it or not, that's the dumbest statement I think I've ever heard. At what point is it true? Science is not meant to find truth. It's meant to verify. Okay, the verification process is not the same thing as fundamental truth. How many times have we had to rewrite the science books? I mean, what a stupid statement. It's true whether you believe it or not. That's idiocy. So, yeah, anytime you hear statements like that, uh, you need to go wash your brain out, because it's already been being scrubbed on. It's so obvious, but whatever. I'll be back in 5 minutes so I can stop talking about nonsense. All right. I really did think about going short there. I think I may have missed it. During these crude reports, they like to slam it into and away from these massive areas. Or if they're not quite to it, they'll use it to get us to that spot faster and then move us out from it, which I think is the case today. So unless we get one more push up, it appears that I've missed this golden opportunity for the most amazing of shorts. I think this is going to be probably the big one that I've been wanting to get on board with for months, but just hadn't set up yet until today. So we'll see. I'll be back in 5. Okay, this is looking about how I would expect it to look if it were to go up one more time, but not, that doesn't necessarily mean that it will. I mean, it's come back into these highs, which is good. So if we can turn up directly, maybe come down to the top of this, what is seemingly a normal distribution in the volume, we could find support and head up one more time and hopefully throw this channel over a little bit. I always like to see a slight throw over. Because then my stop doesn't need to be as large. You know, I might classify this as a double 3 with a triangle in the middle. It all depends on where I connect the starting point of the channel. Well, let me work my way down first. That was a heck of a high, wasn't it? If I had been more closely paying attention to it, I could have stopped and reversed like I was wanting to do yesterday, as I had mentioned. I mean, look at that. Massive, massive, extreme churn right at the high. Slight retracement back down. I want to see this on the tick 1. Oh, yeah. Oh, yeah.
Stop filled.
Oh, I just got stopped out of the ES naturally. Stop it, Charles. No, no. Arnold. Arnold. How do I say it? Arnold. Sorry. It's like me trying to say road. I just call him Rerd. Those Dutch R's get me. If I wouldn't have learned French, I could probably do it. It is indeed. Is it? Is it just as hard for the British? I imagine they barely have an R at all. I dated a British girl in college. Don't tell. Well, never mind. And she was what we would call Cockney. She was a bit Cockney. Unrecoverable. Give me a break. Not as unrecoverable as you would think it is. Yep, I missed it. So much for my waiting and hoping and wishing and praying. That stuff never works, does it? I tell you what, it's always been a bit difficult for me to stop and reverse because when you're wrong, it really stings. It's not a very good one, my English accent, but hers was Cockney. She could barely pronounce an R at all. This is the one that would have sealed the deal for me. See, this is the difference between trading and talking to an audience that can't talk back, which is a very bizarre thing. Part of the reason why some might consider me to be a strange individual, because I have spent many a year speaking to an audience that cannot speak back. And I'm afraid to open the mic up to everybody. For fear of that question. People trying to nail me down to a time frame, which I'd love to give you, and I do give you, but will never give you again after this update is out. Yeah, see, that's the trade I've been waiting for, man. But at least I caught it into it. I just had to hold through this, which was quite rough. And again, it's the reason you don't tighten your stop to break even if you're holding to a target, because you have to be able to hold through that first retracement, which can be up to 99%. I mean, it may even just tick out your entry price just barely enough to stop you out, in fact. So if you're ever going to be able to hold to target, this is one that you'll have to live through pretty regularly, and it's not easy at all. In fact, it's half the reason I get up and just walk away sometimes. It's usually when I do the best. That's it. You're right, John. John says, well, maybe you ought to get a better audience. I can understand it. It's frustrating. It's frustrating to me more than you, believe me. You guys that are frustrated, and I know many. Well, it's not for nothing. I'm actually telling you it will be ready at a certain date, and then I don't follow through, and it makes me look horrible. And that will never happen again because we won't discuss dates, and you won't have to worry about it anyway because any update to the software from this update forward, you'll have immediately. And in the 2021 version, you'll have the option to do automatic updates. If there's new DLLs available, you'll be able to click a button, shut down Ninja, grab them from the server, and then reopen Ninja, and you've got the update. What's more difficult is building out templates, which is what I want to get away from, that will work for both, well, for all three, as I was saying yesterday, and this is the last time I'll say it, future, stocks, and Forex. So these are the actual long signals in crude today. On the gray chart, we have this Bloodhound template, which is simply reading the signals from the market geometry template, which is this one. But it just changed because I deleted some lines. And thankfully, the way that I've built the new one, it will hang on to those previous signals for the day. So it grabs the signal from this chart, which is the most important signal, but it's also secondary to the operative time frame. You first have to determine what the operative time frame is. And this is me now going over the rules. And that operative time frame is built into the row 1 for the lower time frame signals, 10-minute down to 1 minute. And the row 2 is the volume and momentum confirmation for the higher time frame signals, HTF, which includes the 10-minute for a particular reason, which I go over in the instructions that I've been building out. And I've also listed out the settings for all of those solvers so that you can manipulate it. I'm giving away way too much information, but I don't think it matters because I can hand somebody an automated system and some people will still mess it up. It is not unmess-upable. So I don't think it really matters that I give away all these secrets because somebody will find a way to mess it up without fail. Why? Because of stress and gambling and risk. Some people just cannot handle it. I was one of those people for a very long time. Until I learn what we'll be going over tomorrow. Now, again, row 1 and row 2, and then I'm going to come back to the rest of your questions now that I've been stopped out of my ES trade. Okay. Sorry, love. Almost there. Ooh, I better make sure that's not set to all workspace charts real fast. Whew, okay, good. It's interesting. As I get stopped out, we get another long signal. Just give me a minute. Let me come back. My main focus, honestly, is actually taking some trades in front of you guys so that you can see that it's not hocus pocus. And then I'll start answering some questions. And if we have to go a little bit longer than anticipated, that's fine too. My goodness, that's it. I got stopped out right as it made the low. This is one chart you want to never fail to watch, and that is the RTH chart. Whether it be the 1 minute, the 15-minute, or whatever, you want to make sure you keep an eye on this one. Because when things don't quite line up perfectly on the ETH charts, you'll usually find that it does line up quite perfectly on the RTH. The only problem with this is that it doesn't have the downsloping area that I would prefer. And I'm not going to take a second attempt at this one. I'm allowed to, but then I'll be done for the day for sure if it fails. And should that be looking for this higher low, or should I be expecting one more low? Well, let's see. Looks to me like I should be going long right now as a higher low, but I'm just not ready to do that yet. Yep, that's your higher low, I would imagine. So this is all very triangular looking-ish. A, B, C, D, E. It's what you call a barrier triangle, maybe. It's really a running triangle. Unless you start from here, and then it is a barrier triangle. So let's just look at that. If that's the case, we're expecting one more low. So none of what I just said makes any sense unless you know Elliott Wave, but let me see if I can make it clearer for you. And we're about to get that lower low here in un momento. Okay, just give me a second. I may just take this. Hang on. It's such a risky one. I am expecting another low, but have we completed the retracement up yet is the question. Can't wait until I have that mouse tracking capability for this other platform I'll be using directly next week. There's my long signal on the row 1. Well, it's okay. There's the confirmation signal that we have enough in the way of or I shouldn't say in the way of, but concerning volume and momentum divergence confirmation, we have enough of momentum confirmation and volume confirmation to allow for a long trade on the 10-minute chart. But I'm not seeing the kind of look that I want to see just yet. I'm starting to see it. I need to see it slow down a little bit. I don't think it's... There's the churn bar. All right, we've got a pretty clear, and it's on the row 2 now. That's a valid long. If I take this and I'm stopped out, I'm done for the day. Nabbit.
Order filled.
I gotta do it. Even though I am expecting one more low, I'm just like in crude and the ES yesterday. I don't think it's quite done moving up into the end of the correction, and I'm going to go along one more.
Order submitted.
Right there. Whoa, 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 that's a stop. Hang on now. It's not going to fill it now, is it? It's a very, very tight stop.
Order filled.
All right, let's give it a little bit of breathing room. If I get stopped out of this one, it's going to be all Q&A time until we close. And I think I'm going to be stopped out directly, which I'd rather be stopped out quickly than have to live through 30 minutes of agony, which really shouldn't be agonizing, but for me in front of an audience, it's a little debilitating. I don't recommend trading in front of an audience. It's not the best. But I do recommend having someone that holds you accountable. I got to give it at least like another tick or two just in case. It's way too tight of a stop for this trade. But I don't want to give back too much either. I'm willing to take 4 or 5 points, 20, 25 ticks, but that's about it currently. If the 10-minute chart average range, let's just look at it, is 23 ticks as it is, then my stop should really be a little bit larger than that. But this is no longer looking valid. Where I entered it, it was borderline valid. Currently, it's no longer valid, but I'm gonna, if it's gonna stop me out, I'm gonna take a full stop on it. In other words, I should probably close it early and save a few ticks, but I've done some testing in that regard, and it doesn't test very well. People love to go to break even because it feels good, and they think it's a quote unquote, you know, risk-free trade. Your risk is the initial risk. It's not the risk after you move to break even. Whatever you do after the fact has nothing to do with the risk on the trade.
Stop fill.
And I'm out. Thank goodness. All right, now we can answer questions. To be fair, I shouldn't have taken that one at all. It was going long into an area that I was waiting for the short out of. So when I went long yesterday, I got out way too. Let's just look at that real quick, and then I'll answer all your questions. Well, let's just keep it on this row 2 here. I want to say it was right there. Where's my trusty little tool here? Yeah, I mean, look at that. And that was still $1,000. Well, hang on a second. I might be lying. We don't want to do that. 10 points on one contract is 4 times 12 is 48, 480. Yeah, about close to $500 almost. And then, yeah, so it was $1,000. But look at what it should have been. Is that one contract or two? One contract. Oh, duh. I've got the price built into this. Goodness gracious. I even wrote this tool. Yeah, 487.50 or so, something like that. And then the second one was 637. So $1,100, something like that. All right. My target was up here. And why didn't I hold the target? Oh, probably just because I was trading in front of an audience for the first time in a while. And, you know, it's a little uncomfortable. Takes a little easing into. So that should have been, about $4,600 on 2 contracts. It's crazy how fast this thing is still moving. I remember 5-point ranges in the ES. It was miserable. You remember those days? Everyone was saying, can we please stop trading the ES, Daniel, please? I don't hear a lot of that anymore. Someone asked, what is the best instrument to start with? So I'm going to put together some kind of a package for you guys. Oh, Miss Haneke, are you still there? Did you ask a question earlier that I can answer real quick before you go? Miss Diane did. That's right. No? Okay. Yeah, Miss Diane had asked, I think it was about which which instrument, wasn't it? Let me just go back and look real quick. Oh, please explain why use 20-minute and 30-minute time frames. I am using 20-minute and 3-minute during first hour of open. Why use a 20-minute and a 30-minute? Can you put a little just add a little more context to the question, maybe? So I don't have a 20-minute chart, but I have a 10-minute, a 15-minute RTH, and a 30-minute. You're basically asking, why am I using so many charts, and what's the reason for the value or the period that I'm using? Like, what's the logic behind that, basically? Because it's an awful lot of charts, seemingly, right? Is that kind of how you would expand on the question? If I turn your microphone, oh. So you're asking, why don't I use a 20-minute instead of a 30-minute? No, that's probably not either. Do you mind if I turn your microphone on and you can just kind of tell me, or would that be a bit intimidating? Why not 10-minute and 3-minute? Well, I do use a 10-minute and I use a 5-minute. So let me, I got hay fever going on or something. Somebody's mowing the yard, or it's probably these cats I'm surrounded by. But just give me 1 second. I'll be right back. And I'll explain exactly why we use the time frames that we use. Sure. No problem. Yeah, no, it's a good question. A lot of people ask that. So I'll address it now. Give me just like 2 minutes. Okay, let's do that. So this is probably going to be a little bit overwhelming, but it's also the only method that I found that works. So you guys can surely find this on any of my old webinars, which, you know, most of them were extemporaneous. Back in the olden days, I used to prepare quite a lot for a webinar. And then I got to the point to where my main focus was just simply getting everything to work on NT8. What a chore that was. Thankfully, we finally arrived, and now I can focus on making succinct, information-packed webinars explaining, exactly what it is that we do. And all of this stuff will be answered on the website and in a short list of videos describing exactly what it is that we do, how we do it, and why we do the things that we do. So this is one of those questions that needs to be answered on the website itself. Wouldn't that be something? Okay, so I'm going to show you something that usually just the members use and see, but I don't have a problem showing it to people. I don't have a problem with anyone having it. Anybody can have access to this, and it doesn't faze me one bit. So this describes the time frames that we use, excuse me, but it doesn't really define the reason why, the reasoning behind it. So the reasoning behind why it is that Mr. Daniel Rowe has put together so many charts. Shouldn't talk about yourself in the third person, I forgot. I'm trying to make this thing smaller. There we go. Is specifically for the volume and the momentum divergence signals. Every single chart, every bar, and this is why I abhor Renko charts. Let me put it another way. Let me make it into a positive statement rather than a negative one. So we have no control over when a bar closes other than the values that we set for the period, or what have you, the variables of that chart. If it's minute based, then it's simply every X number of seconds or minutes that bar will close. Okay. If it's tick based, there are an endless number of potential ways that you can build that chart. The next one that I'll build will be adaptive, so that we won't have to continually update these values all the time, which is one of the things that takes a bit of time in updating the workspaces. But okay. So you've got tick bars, or let's say non-time based charts, and you have time based charts. Rule number one: when we're doing market geometry, we must do the market geometry on both time-based charts, and that would include the RTH session chart if the instrument that you're using happens to be a what's the word I'm looking for? Happens to be based on another vehicle. So, for instance, for the S&P 500 futures, the E-mini futures, the underlying instrument is a stock index, right? The SP 500, which is itself based on 500 different stocks with various weightings. So that S&P 500 index that the futures are tracking, let's say, is the underlying vehicle, and we're trading a derivative of that. So we want to also include the RTH session when we're doing market geometry for the ES, the YM, the NQ, the Russell, basically all stock financial futures, stock-based financial futures. Okay. Well, that covers the 2-minute chart types. Well, what about the tick-based? We want to also include the tick charts, and you could substitute volume for that, and I think you'd come pretty close. But the majority of people out there are using minute charts and tick charts, and it's why I include, and it's why it's so important to keep that tick chart, that's why I put the market geometry template on the tick 1, because a lot of people will want to delete those tick charts because tick data is rather intensive data. It's the reason for if you have, a lag, Ninja feels a little sticky. It's not responsive as it was maybe 10 minutes ago or something. It's usually right around the open in the ES or the close or some report. And recently, the ES has been just out of control volatile. So the tick data is 4 to 5 times heavier than it usually is. Okay, so that's quite important because the tick charts give us areas that the minute charts don't necessarily give us, because during the overnight session, the tick charts have many fewer bars. It's not the right way to word that. The tick charts have less bars, probably by a factor of 4 or more, than do the time-based charts, right? So that covers why minute, tick, and for the minute, both ETH, which is including the overnight session, and the RTH, which is just the day session, eliminating the overnight. Well, why so many? Why do you have to have a 2-minute, a 5-minute, a 10-minute, the 15-minute RTH, the 30-minute ETH, the hourly, the 138-minute? Why do you need that many charts? That's kind of ridiculous, Daniel. Well, what I'm attempting to do with these workspaces, and this is going to be changing in 2021. I'm going to have very specific and quite precise versions of this. One for day trading, one for swing trading. Okay. Well, it still doesn't explain why I've got to have so many minute charts and so close together. The reason for that is the close of the bar is random. People don't necessarily like hearing that there is quite a bit of randomness involved in what we do. It goes against the grain of our belief system, because if you're trading and you're putting your hard-earned money at risk, that means that you believe, whether you know it or not, that you have an edge. And if you don't believe that, why are you risking any money? Right? If you don't believe that, then you may as well go to the casino and have a good time. But to prove out an edge is a quite difficult process. It's not easy at all. It takes a lot of time, especially if you don't know anything about logic, statistics, or how to build out a very specific set of rules. It doesn't have to be too specific, but you do have to have some rules that you can base your performance on, right? If you can't measure it, you can't improve it. I think that quote is attributed to about 30 different people, but I want to say the first person that said it was Kepler. Anyway, so the reason why I have tightened it up, because I did used to have a 20-minute chart, and it went from a 5-minute to a 15-minute. No, it went from a 5-minute to a 20-minute, which was a factor of 4. And I've changed that factor to 3 and then to 2. And the reasoning behind that is, and you'll see it as you watch these charts with the volume and the momentum divergence on it. When you're coming into an area that's very clearly defined by the market geometry, you'll notice quite different looks in the volume, the price action, and the momentum divergence or lack thereof, just the momentum in general, between the 1 minute, the 2 minute, and the 5 minute, and then the difference between the 5 minute and the 10 minute and the 30 minute. And depending upon which chart we're calling the quote unquote operative time frame for the trade, which is determined by the number of bars that make up the correction. So, for example, this short that I should have been in rather than attempting to go long here, I'm still not convinced of that. This could be a low right now, but if it is, it's probably an A-wave low. But regardless, this potential short here takes up from the low to that high 38 bars. Okay, you started to get the signal down here at 23 bars. That's the lower end that I would allow. I prefer to see it between about 30 and 90 bars. Okay, so if I'm in a corrective wave within a trend, I want to count the number of bars that make up that correction such that I can assign to the trade a particular time frame. And why would I do that? What is the sense in doing that? Well, number one, so that you can begin to gather statistics, so that you can begin to do a little bit of data mining from your own statistics and see if there are some things that you're missing and some things that you could add to or improve your system with, right? So I need to determine what time frame the trade is setting up on. And the only way to do that as of yet, in my estimation, is to count the number of bars that make up the corrective pattern. And if it falls within a certain range, that chart becomes what I call the operative time frame. Okay. Once I've established that, so for instance, this being a 60-minute chart, right? I then need to confirm the end of that correction, and I want to get short as close to the end of it as I possibly can. That's the way that I trade it. There's a number of other people that trade this totally differently, and they do quite well. I'll show you that on Friday or tomorrow, maybe actually. So tomorrow or Friday we'll go over that. But I want to get in as close to the end of this move as I possibly can, so that my stop in my mind can be the smallest that I can get away with, and still be able to hold to the target, so that by the end of 100, 200, 300, 1,000 trades, my percentage of winning trades might be a little bit below 50, but my win-loss ratio is going to be massive, because I'm hitting R multiples of 10, 12, 14, sometimes only 1 or 2 if I'm getting scared out of it. And then my losing trades are clearly -1 R multiple, because R means risk. And when you average them all out, I end up having something close to a win-loss ratio of 3. Okay, it's not quite expectancy, but it gives you an idea as to how much money I'm making overall versus how much money I'm risking. So on average, I'm making close to 3 times the amount that I'm risking. Okay, well, you still haven't told me why you have so many time frames, Daniel. Okay, I'm getting there. It's coming. So once we've established that this is the operative time frame, it's a 60-minute chart, I then need X number of signals signifying that we have supply coming in at the high. Okay, I want to see just like we see right here. Look at that. It's a prime example of it. The bar before the last bar is maybe not quite as wide ranging as that previous bar is. It's probably just slightly smaller. So we have a wide ranging bar here, which has a big wick tail at the bottom, meaning that pretty clear sign of demand having come in there as it moved price up. So clearly it is demand. But then demand starts to wane a little bit. And how do I know that? Well, because during the next hour period, we have slightly less volume, as signified by the darker relative volume bar. And this is relative volume, not raw volume, but relative volume. I'm not going to get into all that right now. And it's a narrower range. And then on the next bar, it's an even narrower range during the same time period. So 60 minutes, wide ranging bar. Next 60 minutes, smaller range, less volume. Final 60 minutes, half the range and slightly less volume. But not half the amount of volume, right? So what does that mean? That means that at this point, you're running into resistance such that it has dramatically slowed down how fast price is moving to the upside. You've now run into enough sellers that even though you have this similar amount of volume, it's just slightly less, maybe 10% less. The range is cut by probably 60%. So it's taking now 6 and 10, taking about 3 times the amount of energy, let's call it, buying to move the market every tick higher than was necessary for the preceding bar. What does that mean? That means that you've got a lot of people starting to step in and absorb all of that buying, and they're beginning to sell into it. Okay? On the faster charts, because this is the operative time frame, I then want to look at all of the subsequently faster charts. And I want to see that turn into some very obvious signs of supply coming into the market. And I can only do that using faster charts that are faster than the operative time frame. So as we work our way down, let's now go to a 30-minute chart, which is the next one lower. I'm overdoing this, but I'm overdoing it so that in watching the recording, you'll absorb all of this. You're not going to absorb it all today. Maybe you will, but this is kind of a heavy topic. It's not the easiest of all topics to learn for sure. This is one of the things that people do seem to struggle with because it is, it's a difficult thing to learn. But this is why price action it's the changing hands of contracts, which is the volume, that creates the price action. So all of these price action purists, as I call them, that are focusing on purely price action and saying that volume is useless, I don't see how they can make that statement and think they're being logical, because it's volume that creates their beloved price action. By the way, that's a perfect hit of that channel. That's where I should have waited for the long. And yep, that's where I should have gotten long. So that is a zigzag. Mm-hmm. Just a quick aside here because, well, it's so obvious. It's a zigzag. Oh well. Can't win them all. But if I were a bit more diligent and disciplined, I would have most assuredly done much better today, as I did yesterday, even though I wasn't all that uh, what's the word? Very focused. So even being as distracted as I was yesterday, I still managed to clean up some cash. Took me a whole day to close the crude long, but still. So anyway, that looks to me as if it were a quite lovely zigzag. And this is, just burn this into your mind right now. Just burn it in there. This is what we look for, guys. This is one of the prime examples of what it is we're looking for. And did you see how that long signal just showed up once I actually drew it in? So what do we have here? We have a big upsloping channel and a smaller downsloping channel. Big channel sloping in favor of the trade. Smaller channel connected to the swings that make up the corrective pattern, sloping against the trade. It doesn't always look this pretty because you don't always get that perfect downsloping smaller channel sloping against the long trade, or upsloping sloping against the short trade. But when it aligns, boy, it sure is pretty, and it's almost hard to believe that something like this could even be useful. But I tell you, it makes for some quite beautiful growth curves. It's all very fascinating stuff, isn't it? It still just blows my mind. Can't get my head around it, why it works. But it certainly does. So back to our explanation. Let's see. So we're working our way down, right? And now we're looking at the 30-minute. So the operative time frame for that trade is the hourly chart. Notice that it doesn't show up on the 30-minute because we've passed the threshold, which is about 120 bars or so, give or take. Let's see. This is 75 bars. So that's not the threshold that we broke. The threshold that we broke in this case is the trend threshold. So within these templates, and I don't mind sharing this with you because it's, you know, I'm not worried about someone stealing it and going off and making something similar, because it's It's quite difficult. But I will explain to you now. So I'm counting the bars and I'm counting the speed at which price is moving into that area. I'm measuring the speed of the swing. And I'm doing that in percentage of the average range change from one bar to the next. So I'm looking at what's the word I'm looking for there? It's been a while since I took chemistry and physics. Anyway, it's coming. I'll think of it at 3 o'clock in the morning and wake up screaming it. Anyway, it's the change in percentage average range per bar. And if it goes beyond a certain speed, as I call it, delta, thank you. Goodness gracious. Yeah, delta. Anytime I try to think of a word, it just forget about it. All right, so I'm looking at the delta and percentage of average range per bar movement. And if it goes beyond a certain threshold, well, then it's negated. Okay. We obviously didn't break that in here because it is, in fact, slowing down into that high. And as I typically look for, making it to the top of the channel, well, we didn't do that at all here, did we? But this is a bit deceiving, this one. And I'm going to go into a little bit more detail right here because I think this is a pretty important concept. This high is actually higher than that high, isn't it? It is. Okay, but I'm drawing my channel like so, and it's not connecting to that highest high. Well, why not? It's connecting to the widest perpendicular bar. It's connecting to the bar that is furthest perpendicularly, it's a new word too, from this baseline. Right? Because that distance is much further or farther away than this distance. If I were to draw a perfect 90 off of that, which I can't seem to do, but so I elected to use that widest distance because that's in all of the testing that I did, which is a lot. This is the one that was most often used as the target for that next swing, that coming swing. All right, so then what do I need to do? Well, I would do a parallel of it. And these yellow lines are actually readable within that market geometry template on the tick 1 chart. And I would connect that to the highest high between these 2 points. And that is this high. And guess what? Oh my goodness. How bizarre. All very strange, isn't it? And you'll hear, well, you used to, those of you that have been in the trading room would hear me say all the time, you'll throw over one area into the next if there's a little bit of distance between them. And you tend to throw over the smaller area into the larger. Okay, in this case, you threw over the larger area to make it to the smaller, which is this one. Smaller meaning fewer number of bars between the start point and the end point, or let's call it the start bar of the baseline and the end bar of the baseline. You see? Okay. So As we work our way down, you'll start to see that the volume signals and the divergence signals begin to show up, because we're now looking inside of these bars on a slightly more granular basis, chart by chart, as we work our way down. And if I do that too drastically, if I make that change from one time frame to the next too drastically, meaning to, let me just turn this thing off. I'm about to get really PO'd here. I don't know what is making that beep. I cannot figure it out. Okay, so as we move down from a 60-minute, if I move down to a 20-minute, well, that's a factor of 3. Okay, it's a little bit too abrupt, because again, the only variable that determines when that bar will close and whether or not it will be a wide-ranging bar or a narrow-ranging bar, churn, climax, whatever, is that time at which it closes, which is basically random. So I want to look into these bars using really no more than a factor of 3 scale from one chart to the next. I think the plumber just got here, actually. Well, I'll have to leave here in about 5 minutes. Well, I'll have to step away in 5 minutes for about 5 minutes, and then I'll come back and answer the rest of the questions. But yeah, it's a little bit too abrupt, a factor of 3. So the factor I'm using now is no more than 2.5, which is the change from 2-minute to 5-minute. And yes, I'm giving away all my secrets right now, but they're not secrets. It's just that I've put all this together in such a way that makes for a system that people can use profitably, instead of buying garbage from all these other, well, whatever. So now let's move down to the next one. It just really upsets me when I think about all the people that sell just nonsense and just basically take people's money, knowing that they're about to go off and blow their retirement. I don't think it's very nice. So now we're looking at from a 30-minute to a 10-minute. Well, what happened, Daniel? That's a factor of 3. Well, I've also got a 15-minute RTH chart, which is right here. See? And look at where the high is. It's the opening candle. And it just goes beyond the actual target. Isn't that crazy? And yes, I'm using that high. We talked about that yesterday as to why. So, pretty interesting stuff here. I'm going to have to answer the door in a second, so let me see if I can get through the rest of these charts real fast. All right, so that is going from 30-minute to 15-minute. And look at what I have here. I have 2 churn bars right at the high. One on the previous 15-minute candle before the close. That would be the 15-minute bar that closes at 4 p.m. Eastern or 3 o'clock Central. So that's the bar where the stock market closes, and it's a churn bar in the relative volume. Even though it's a narrow ranging bar, it's actually higher relative volume. That's about the best sign of supply coming in at a high that you'll see. I mean, the best would be a big, huge, massive churn bar, but you can't really safely expect that all the time. But that's a pretty good sign of supply coming in. And the fact that it's lower volume going into that high is an even better sign. It essentially means that there's not nearly as much interest in buying on the way up. And you can just kind of see that, can't you? Look at the slope difference between this move and this move. See? So it's really, really waning momentum, but the chart is still not quite fast enough to pick that up in the divergence signal here. Okay, well, let's go down to the 10-minute chart now. We've already got the sign of supply coming in now, and even better right at the open there, which unfortunately is down here, a little bit lower than the high. But here on the 10-minute, now going one time frame lower, now we're getting into the granularity of what's really happening intra this very last swing up. And what do we have? We have this massive extreme churn bar. Although it's quite early, that's the point at which we know for sure that this market is slowing down. We've got a huge amount of supply coming in at that point. How do I know that? This extreme churn bar must have at least one tick smaller range than the preceding bar, and yet the rise over run, or let's say the delta 185 over 124, is about a 60% change there, and yet it's a slightly smaller range. So even though you have, let's call it 60% more force to potentially move that market up, it didn't move it any further than the preceding bar. It actually moved it less far, not nearly as far, only slightly in this case. So we know that it's starting to slow down there, and then watch what happens. Just kind of drifts sideways and then starts up again. Okay, and here is the high. It's basically a double top. Man, I'm going into way too much detail here. Let me answer this. This is the plumber. All right, sorry. He's trying to find the house. He'll be here in a few minutes. Happened to hire a handyman to do some plumbing work. Not an official plumber, and you can imagine what happened. didn't go according to plan. Maybe I am going into too much detail with all this, but do you guys like this? Do you appreciate it? Am I just going into way too much minutia? Give me a little feedback if you would, please. It's good. It's fine. Yeah. It's not for you, Craig? Ah, okay. Whew. I was hoping that was the way you meant it. Okay, good. Good. Okay, so now this is the spot we really want to home in on, or I guess some would say hone, but I believe it's home, as in homing beacon or homing pigeon. So we want to really zero in on this right here. I think you hone a knife, right? You don't home a knife. And I'm not trying to hone this. I'm not trying to sharpen. I'm trying to zero in. I don't know. I'm always trying to correct people's English when my English is quite horrid. But anyway, as we work our way down, the next chart is what? Notice I've got a little number following these charts, huh? So the next one will be 2. But once I hit the 2s, I now have a tick 2, a row 2, and a min 2. All right, the min 2 is the 5 minute. It's the next step down. It's 10 divided by 2. And then the tick 2 is attempting to emulate that 5 minute chart using the time frame tuner to determine the value of what this tick chart should be, and I need to update it again, unfortunately. That's what I want to automate. All right, this is where we really start to see what's going on at the end of this move here. All right, so again, this is the tick 2 chart, and I said I'm trying to emulate the same number of bars as we would have in the 5 minute chart during the day session. So I'm looking at the spreadsheet now, and it's all explained right in here. Okay, what does that mean? Well, I start with the min 1 value, which is the target minute period. Target minute period. I have to leave in 10 minutes anyway, but I'll definitely get through this in the next 10 minutes. How do I have everything other than something's not right here? Oh, sorry. Well, whatever. Okay, I disabled some stuff. So, time frame tuner allows us to put in what our target minute period is, and then it will tell us, depending upon the session that we use for that particular instrument. And I always recommend using the RTH session, obviously, right? Because if you included the overnight, well, then you'd be factoring in the number of ticks per 2 minute bar in the overnight, and in the ES that is just minute compared to the 2 minute number, or sorry, the number of contracts that change hands during any given 2 minute bar within the RTH session, which is between 8:30 a.m. Central and 3:15 p.m. Central Time, Chicago time. Okay, so that's why we use the RTH session. And this is telling me 2060 for the value of the tick 1. And then the tick 2, I set it a little bit larger than 2.5 because I only have 2 tick charts. So I want there to be a little bit more distance between the two than just 2.5. And why not just use an old fib in there, you know? If we're going to do it, if we're going to use decimal points, let's make it a good old Fibonacci, you know? Because clearly Fibonacci's are much better than a simple 2.5. Uh-oh. And there I go. Okay. We're adding a new rule to my MO and SOP. Daniel's not allowed to touch technology anymore. Only his charts. And that's it. So anyhow, that's the difference between the tick 1 and the tick 2. The tick 1 is emulating the value. It's trying to line up the same number of bars during the RTH session as the min 1. Well, the min 1 is not necessarily a 2-minute chart. It's a 2-minute chart for most instruments. And then you get to the bonds. And there, it just simply does not make sense to use a 2-minute chart because of the volatility, the movement of the market. So we're using the 6-minute period for the bonds. And then I've elected to use, for the German Bund, the 4-minute period because that's quite a bit more, it's quite a difference in movement between the Bund and the bond. So the workspaces that are coming out are going to be a 4-minute period for the Bund, the Bund. I'm not saying that right, but anyway. Then the ZB, which is the 30-year note, or the ZN, which is the 10-year note. Okay, so that's why that little number after the chart period. Okay, because it's not always the same for every single instrument. And you may want to start off with a 5-minute chart. And then you can type that in here and it will spit out all the correct values for the subsequent changes in periods of these charts. So that's what this spreadsheet is for you guys to be able to make your own. You can do some testing. Maybe you want to do swing trading only. Smallest chart you want to look at is a 5-minute, yada, yada, yada. Pretty neat, huh? I've got a little bit of tweaking I need to do to some of these, but like this one, you know, equals 10. Well, that's not going to change if you change it, but yeah. Anyway, I had to do that because of the difference between these, the bone, the bond, and then the rest of them. And then the Forex and the stocks. So, yeah, it's a lot. It's a lot. But at least I've done the work necessary. And you don't have to do it. What a relief, huh? So at some point, this will all be automated with a little script or app or something extraneous to, or let's say outside from Ninja, that will control Ninja and at least control the XML files and make those changes. So now that we're looking at the tick 2, because this is really the next chart faster than the 10-minute, because remember, it's 2.618 times the 2-minute chart. not 2.5 like the 5-minute chart is. So this is the next fastest chart. This is the chart closest to the 10-minute, one step lower. Okay. And look at what you have there. Dun, dun, dun. Got the old volume divergence that was canceled at some point because it's just too long, but it's not quite a 2-bar pattern because there's a bar that separates them, but the next version of the volume analyst will have that ability. You'll be able to add a what do we call it in there, a fudge factor of 1 or 2 bars, and then yep. So now we'll look at the 5-minute, and you can kind of see, I mean, again, this is after the close, so you would expect there to be some consolidation on the tick charts just because of the loss of number of contracts traded, right? But man, what a pretty looking structure into that. And you can see the waning momentum. It's quite obvious on this tick chart. Man, I love this stuff. Gosh. It's just so amazing to me. It's almost like it's beautiful or something. Well, it is. And here's the 5-minute, and you can see the difference between the 5-minute and the tick chart, because the tick chart, eliminating those overnight bars, looks as though it's about 4.5 to 5 times faster, slower than the 5-minute, but that's only because of the overnight session. And then once we open, which is right in here, then you'll start to see how they kind of begin to align as far as number of bars. So from here down, let's just verify that. 15 bars, okay. Well, give or take. On average, across the whole session, they would be much closer. But that's how I do it. That's why I do it that way. And then we look into the next chart, which is that row 2. And this is the one that also contains the signals for the higher time frame charts, which would include that hourly. But it didn't quite show up because we were getting those signals a little bit early on some of those charts. In real time, though, it may have shown up. That's why you can't really trust historical signals. And this may seem counterintuitive, but the way this works, it's a purely real-time system. And so the volume signal, it can't fire during the first half of the bar. And determining when that midpoint is with these row bars that include range, ticks, and seconds, took me about 12 hours to write out the specs for that. And yeah, Josh and Akash were kind of, I guess, amazed that I could do it at all, but that's what's in the counter that we built, is essentially the logic behind the timing of when these bars will close. because it's a quite difficult algorithm to figure out, because they have both a minimum and a maximum limit for range, ticks, and seconds. So it's a pretty elaborate bar type. And I'm glad somebody made it because it was sorely needed. So, yeah, it may have shown up in real time back here because we have no idea what signals may have transpired in real time for each of those charts, which is why I'm using so many charts. And somebody asked me earlier, well, what are the rules precisely? Well, these are the rules precisely. Madness, in other words. Pure, unadulterated madness that somehow works. Can you believe it? But I'm using fuzzy logic, which is what Bloodhound was designed for, and I've never seen anybody actually use it. But then again, I used to build systems for people, so I know how to use all these things because I spent a very long time studying them. But nonetheless, whatever. I had to build a lot of systems for a lot of people over about 3.5 years. So I'm looking at the signals from all of these charts, and I need to see confirmation that once we hit the areas, that price is actually going to stop there. I want to see some sign of that before I'm allowing a signal to go through. Okay, I want to see momentum divergence on a minimum number of charts, depending upon whether I'm looking at the 30-minute, the hourly, or even the 10-minute. And I've got essentially 2 trade types per chart. When there are really 4 trade types, but I can't do all of that in Bloodhound. I just, it has its limits. So in 2021, you will see something that will knock your socks off. So stay tuned for that. It's going to be, I don't even know if I'm going to sell it, but I've got to give it to all the guys that have been with me up to this point and everyone that buys in 2020. So it's something I must include for them, but I don't know that I'm going to, I can't, only so many people can have the same system, It's not going to be fully automated, so we can get away with a few more, but there's got to be a maximum number of people that will have it, and that's something I got to figure out. But anybody who's with us before the end of the year will be able to participate with us with that tool, which I will leave unnamed until the day that it is ready for showcase. But I've got a lot of it planned and written. It's just going to be a bit of a process to make. So we've got the engine. All right, so that's row 2, and then we go to row 1 and min 1. And I am 5 minutes late for my next meeting, so let me just rapidly go through this. So this is the 2-minute chart. This is the starting point, basically. I do also have a 1-minute chart, but really only for the big stock indexes. And there's that churn bar right at the end of that high, which is where I would have entered. And then my stop would have been far enough behind that high to allow for a 1 or 2 tick pop, which happened within the next 2 hours, hour and 10 minutes. Yep. So that's where I would have entered, and then I would have had to ride that out, which would have been nerve wracking. But see, most people would have gone to break even by then, right? Well, they know that. The guys that actually move the market, they know that. And then it goes. And then the row one is the chart on which we have the lower time frame signals. Yeah, this was not the cleanest of signals, but that kind of tends to be the case in the ES because there's such a dramatic difference in volume between the overnight session and the day session that even though it may look, pretty perfect, uh, if it occurs in the overnight, if it occurs right around 2:30 to 3, you'll usually get it. But if it's kind of at the end of the Euro session, let's say the end of the morning of the Euro session, just before their lunch time, then you don't necessarily get those big, beautiful volume signals. But you will see the loss of momentum nonetheless. But yeah, this little long here is one from the 2-minute chart. And it's not a long, it's just showing you that there is enough confirmation in the volume and the momentum divergence to justify a long signal if you had the areas in the market geometry. Mm-hmm. And it fit your style, whether you're looking at the 2-minute and the 5-minute only, or you're more like me and you're focusing more on the 10-minute through 138-minute and looking more for these bigger moves. I'm more of a bigger move kind of a guy than I am a scalper. So scalping is a surefire way to lose a whole lot of money real fast, in my view. And there's people that do it though, and we'll talk about that tomorrow. I didn't get a chance to Scalper Viper Falcons. Perfect. Perfect name. Yeah, that was a whole lot of detail, and that's really a session that needs to be um, I need to have a list of bullet points in front of me to really present that in a manner that's more easily digestible. I feel like I'm leaving you guys scratching your head more than I'm helping you when I just kind of run through stuff like this. And then I got to go. Like I've got to go 10 minutes ago. So if you do have questions, just write me. If you're in the forum, put them in the sidebar, the forum chat. And if I didn't get a chance to answer your question, I'll go through the chat and I'll write you back this afternoon. But my main focus from here on out is, well, first opening the door for the plumber to fix the last handyman's botched water filter deal. It's like the whole cabinet is full of, well, mold and water. And then the installer. So, but I will answer your questions. I just don't have time to do it now. So we'll talk again tomorrow, huh? I'll talk to you guys at 9 a.m. Okay. All right. Thanks, Jim. Thank you guys. Not as great of a day as I wanted it to be, but that's trading. We started off with a bang though, didn't we? All right, you guys have a good one. Talk to you tomorrow. Bye now.